2012 was a year of great performance, growth, and change for Hubbell. We are pleased to report that Hubbell achieved record earnings per share with a total return of 29%. Despite continued weakness in our largest end market, non-residential construction, uncertainty surrounding the U.S. election, and a pending fiscal cliff, we were able to deliver strong results. We also had some important leadership changes this year. We welcome Ong-Ping Shi to the company as Vice President and General Counsel, and Bill Sperry was named Chief Financial Officer. Finally, Dave Nord has succeeded me as President and CEO as of January 1st, 2013, and was elected to the Board of Directors. His transition into this role has been seamless, and I wish him great success in the years to come. I will continue in my role as Chairman of Hubbell's Board of Directors. Looking back at my decade plus with Hubbell, I have seen it nearly triple in size and become a more profitable, capable organization. This transformation is due in large part to the work of our employees, and I would like to thank each and every one of them. I am extremely proud of the work we have done, and I feel we are well positioned for 2013.
As Tim said, 2012 was a great year for Hubbell. I know we can continue these trends moving forward, and I'm excited about Hubbell's future. To continue to evolve in an ever-changing industry and marketplace, we need to work together as one cohesive group. In November of 2012, we held our first Senior Leadership Summit, inviting 75 of our top leaders from around the company. The event was designed to energize our leaders about the future and gain alignment and support around the idea of One Hubbell. The meeting focused on 4 key strategic objectives: serving our customers, operating with discipline, growing the enterprise, and developing our people. We take pride in the reputation Hubbell has throughout our industry. Serving our customers, both externally and within Hubbell, will always be a cornerstone of our work. Internally, improved communication tools will help employees from around the world work together. Externally, improvements in e-business, and notably the industry-sponsored IDW, keeps us at the forefront of reliable electrical solutions. One of the key drivers in Hubbell's margin improvements over the past several years has been our productivity programs, specifically our lean methodology. This approach to operating with discipline enables us to identify gaps and correct them quickly. It also helps us improve upon what is already working well and apply that to our other areas of the business. Since 2000, Hubbell has completed more than 30 acquisitions, adding approximately $1.5 billion to sales for the company. The pace at which we grow the enterprise has accelerated in the last few years, with 7 transactions in the last 18 months alone. Acquisitions such as these, along with the introduction of new products, will help us grow moving forward. Finally, our success comes down to our employees. Developing our people through training, education, and career growth will ultimately make us a stronger organization. Not only will we have the right people in the right jobs, we'll have solid bench strength to ensure a bright future.
I'm going to provide you an overview of our financial performance for 2012, as well as give you a brief outlook of what we expect for our financial results in 2013. 2012 was another year of record results for Hubbell. We generated sales of $3 billion, which was a record high, and earnings per share of $5, also a record. At the operating margin line, we generated margins of 15.5%, a 70 basis point improvement over last year, which is an attractive level and also well above this point in our previous cycle. We set for free cash flow a target of equaling net income, and we're able to meet that goal this year for our 6th consecutive year. We also completed 4 separate acquisitions during 2012 that were spread across both our electrical and power segment. We continue to be very active in that area and feel we can add a lot of value to our shareholders. In terms of returns to our shareholders, we had 2 primary levers this year. First, we raised dividends twice during the year, as well as returning over $75 million to our shareholders in terms of purchasing over 1 million shares. Let me turn to our 2 operating segments and give you a brief overview. At the electrical segment, we grew about 6%, very attractive growth rate, and power grew at 7%. both of which enjoyed good market support in doing that, and both improved their margins during the course of the year. Let me turn now to our outlook for 2013. We expect modest organic growth through 2013, which is really driven by our four end markets, where we expect growth in each of them. Our three largest are non-residential construction, utility, and industrial markets, where we expect low single-digit growth. And our fourth market is residential, and we expect actually double-digit growth there, as the rebound we feel is really gaining some momentum. The result of those markets should give us about 1 to 3% growth organically, and we expect to be able to add 2 points from the acquisitions we completed, both in 2012 as well as one we closed in 2013, to be able to generate 3 to 5% sales growth. We also are hoping to expand operating margins by approximately 40 basis points in 2013, and we remain very focused on trying to balance cost increases we may get from either inflation or from commodity cost pressures, and balance those against productivity and pricing gains. So while our recent financial performance, we believe, is very impressive, we believe we have the opportunity to continue to improve and generate more shareholder value for you.
2012 was a tremendous year for Hubbell, and I expect 2013 to bring more of the same success. Our employees will continue to be proud to call Hubbell home, and our customers will continue to look to us first for reliable electrical solutions.